Focusing this morning on results, and the next one we're talking about is Brigade Enterprises. Strong revenue growth this quarter, but higher subcontractor costs and fresh land purchases may have weighed on margins. Before we speak to the management, Anushi coming in to set up that conversation.
Hi, morning Tamanna. So I'll speak about the headlines number first. While you did speak about a 29% of a revenue growth that we saw this quarter, but margins contracted to 24% as compared to 27% last year. Tad bit of impact in terms of where the subcontractor costs as well as purchases of land parcels weighed on the margins that we've seen. So it's the overall picture in terms of how the near-term margins would shape up for the next 1 to 2 years is something we should be seeing. Of course, with all these real estate companies, the business is on the lumpier side, so revenue recognition is something that we have always cited out. So we'll focus more on the key operational metrics as well. If you look at the pre-sales volume, that's about an uptick of 13% this quarter, while pre-sales value was in the double-digit growth trajectory as per the guidance. 12% of growth is what we are seeing, while realizations edged upwards to 12,200 per square feet. And collections, however, those saw a muted growth of around 3%. In other key developments, the company launched residential projects worth about 2.02 million square feet of land. While if you talk about the other two verticals, that's leasing revenue, that's an uptick of around 17%, while hospitality revenue saw about a 16% of growth. So considering all these three, real estate had about a 66% of a mix to the overall revenue share, while lease rentals and hospitality saw about a 24% and 10% of a contribution to the overall revenue. What would be important going forward is to understand the kind of launch pipeline that the management has for the next 1 to 2 quarters, how the pre-sales and the collections growth would shape up, and of course the industry outlook, considering a lot of these projects are coming in the Bangalore market, is what we are looking at.
Okay, Anushi, thanks so much for setting that up so beautifully. Pavitra Shankar, MD of Brigade Enterprises, joins in right now on the show to talk about the quarter and the outlook ahead. Pavitra, great having you. Thanks so much for joining in. And the reported numbers on most counts seem on the ball. 29% revenue growth, PAT growth 36%. But more importantly, the numbers that aren't quite seen, which is the pre-sales, volume, the launches, as well as the clearances, which used to be a pain point some time back. How have they behaved in the quarter, and what's the expectations for the rest of the year?
Hi, morning Neeraj. Thanks for having me. On the pre-sales front, which are the numbers that we do report as operational metrics, we have seen a growth there as well. That said, our H1 is generally on the lower side in terms of the entire year, and that's a pattern we've been observing for the last few years. It's probably a combination of approvals, maybe the push to get projects in for the entire financial year, as your person also reported in terms of the business is always a lumpy business. So we're trying to get the projects in on an annual cycle basis. But, even if it slips a quarter here and there, that's not really impacting the demand scenario on the ground. So what we saw is that for H1, we had more than 3,000 crores of pre-sales. And we are looking to continue improving that over the course of the second half of the year. Approvals are still, not simple or easy to get, but we're working very hard to ensure that we get most of our approvals in required for the financial year. We have also launched in Hyderabad this year, we've launched the rest of our Brigade Neopolis project, the Brigade Gateway there, and expect that to do pretty well. And for the rest of the year, we do have launches planned in Bangalore, Chennai, and Hyderabad and Mysore as well.
So Pavitra, therefore, does that, just looking at the numbers given, the pre-sales number versus the guided number, right? Because it's been lower thus far, do these launches that you spoke about help you improve that run rate in the second half?
Absolutely. I would say that our achievement of what we've said in the past is heavily dependent on getting the launches. Whatever we have been able to launch so far is selling well. So it's a matter of just bringing that to the customer and getting RERA and being able to sell. So there's no question of a demand picture being different on ground. It's really about just getting the launches going. And we are in that design and approvals phase. In many of the projects, they're in late stage approvals. So it's really just a matter of doing that. But of course, the the achievement of what we typically like to look at from an annual year-on-year growth perspective is heavily dependent for the residential sector on these approvals and launches coming through.
Pavitra, hi, Tamanna here, and always a pleasure to speak with you. Just trying to understand what the margin picture is looking like. Of course, there was subcontractor costs, land costs, etc., which have weighed on the margins. Do you see this easing? Is there a timeline for a revert to previous margin levels at about 27 odd?
So if you look overall at the organization, it's about 27%, and the different lines of business are contributing at different levels. So whether it is the leasing business, which is around 70%, which also includes, by the way, our property management services, which is again why it looks overall a little lower than a typical pure leasing business only. It also includes the hospitality business, which is around 32% EBITDA. The real estate segment is showing a little bit lower, 10-12%, because I think that's more reflective of the projects that we have registered so far and revenue recognition. So as our future projects, which are under construction or newly launched, as they construct and as they get handed over to our clients and customers, that is when they hit the revenue recognition. So many of the projects that are already recognized for revenue are reflective of a lower pricing environment, projects that launched, in 2018, 2019, and a little bit later. But as the current projects that are ongoing today get recognized for revenue over the next few years.
Pavitra, I just want to understand a little more, because you made an important point that the margin is showing the consolidated picture, which includes the property management business. What is the margin picture there, which you're saying is bringing down the overall number, and does that change, or is that typically a business which will yield lower margins?
It's typically a business that will yield lower margins because it's really just a cost plus kind of business. It's integrated into our leasing portfolio because we are providing these services to our commercial tenants. So if you look at pure leasing, it's typically a very high margin at around 85%. But if you incorporate the leasing business the facilities management business, it'll reflect at around 70%, which is the number which we've been reporting, over a longer period of time. So that's the contribution from the leasing business.
No issues there. Just trying to understand what the outlook is on demand coming in. Of course, the real estate is the core business, but in your geography, especially with questions about what's happening in the IT sector, jobs, etc., are you seeing some of that pairing into demand?
I think we've seen it in a very positive way, impacting demand. The previous, interview as well was speaking towards this. IT services, GCC companies, growth, like it's all sort of blending together. It's difficult for us to really tell, is there a net job loss? We haven't really seen that. So over the last few years, we've been getting a lot of questions about, IT services firms reducing their headcounts. But in the meantime, GCC firms have been adding headcount, and I would say adding it at a much more higher salary level, which I think has actually driven the demand for more premium product, not just within Brigade and in Bangalore, but across the market as a whole. It's a trend that we've been seeing in residential real estate. So I think overall it has been a positive impact with all the changes in the tech sector. I feel overall it is a positive improvement, whether it is AI or whatever it is. AI is also creating jobs. Okay. So it's not particularly clear today, like where exactly you're going to see a net effect, but we are seeing positive demand from the customer.
That's an important insight there. Thank you so much, Pavitra, for speaking with us. Pavitra Shankar there of Brigade Enterprises. It's a